We've seen the NSE 20
morning, Alishia. Thank you for having me.
Extend its winning streak to 10 straight sessions, and that for the first time since October 2011. And reading through some market commentary, it seems that it's all about the kind of earnings that we're seeing filtered through here, where there's a general improvement in stock prices spurred on by impressive or better than anticipated numbers. Aly-Khan, what are you making of the momentum and the kind of earnings reports that have come to the market?
So I think consensus expectations have become way too bearish. I think the results season essentially saw a number of companies significantly outperform expectations. KCB, which you just mentioned, Kenyan Cobil, there have been a string of very positive earnings numbers. And that's why we've had this 10-day rally. I think we've still got some more to go. We were really emerging from what I would call a fat tail at the back end of last year. And we're taking some of that egregious valuation out. So I still see it moving higher, but it's a very bifurcated market, Alishia. We're seeing the big heavyweight counters outperform as investors, I believe, are looking increasingly at corporate governance, increasingly at the earnings trajectory, and are increasingly not prepared to accept any excuses. So you're seeing an outperformance in the likes of KCB, Safaricom, East African breweries, which hit an 8.5-month high. But at the same time, you've got a number of shares hitting 52-week lows. Kenyan is not far off one, TransCentury is at one, and you're seeing an increasing haircut on some of those companies. So it's a little bit bifurcated.
Well, that's one trend to note, Aly-Khan. Another to note is that, yes, we are seeing, stocks that are considered more liquid, like East African breweries, like Safaricom, like KCB, moving higher. But you've got stocks like Limuru Tea, Kakuzi, touching 52-week highs as well. And we know that those aren't as liquid in the Kenyan market.
So the tea sector is a special sector. I mean, what is happening there? We got egregious valuations, something like Williamson Tea, which is the best performing stock at the Nairobi Securities Exchange, 12 months through today, up just below 70%, excluding dividends. Limuru Tea, 400 is more than a 52-week high. It's an all-time closing high. And what you're seeing there is prices emerging again from a very long-standing disequilibrium. People beginning to now, finally, companies beginning to pay out fat dividends because the cash flow formation on the balance sheet has been so strong. So you're quite correct to alert your viewers to that sector. I think it's going to continue to outperform. I think tea, breakfast commodities remain firm. And I think tea is still playing a catch-up as a primary commodity.
And this despite the fact that we've got a new levy coming to the fore that's been capped at 1% on the total custom value of tea exported, Aly-Khan.
Last time I heard that levy was withdrawn. I'm not sure if that's still the case. I know the auction a week and a day ago was cancelled, and I'm under the impression that this levy was actually retracted for now.
Okay, so we'll be following developments on that front, of course, as it unfolds. In the meantime, Safaricom really getting attention. We saw last week that the recent launch of Airtel's 3.75G product had turned buyers defensive. And now, with Safaricom coming through pretty offensively to the market, it's gained new traction, Aly-Khan.
Well, it came down on really low volume. We had 5 days when it traded less than 1 million shares, which ranks in the top 10 lowest volume traded since it was listed. So the move lower was not, the bona fides of the move lower weren't really there. Subsequent to that, we've had this repricing of the M-Pesa menu. And I think investors continue to better understand the CEO. He's extremely good at sweating yield, and I think M-Pesa remains the jewel in the crown. Revenues grew 49% at the half-year mark, and I think we will see further acceleration at the full-year mark. Voice has turned around. They gave up some traffic, but they increased prices. And as far as I'm aware, they've seen an uptick of about 2,000 basis points on voice revenues. So I, for one, think there's room for further appreciation to the upside. I think Airtel really have got to rethink their strategy. The price war strategy has been an utter and total failure, and they've really got to look at it again. And I think increasingly investors in Safaricom are understanding that fact.
So what's your outlook for second half earnings here? Because certainly we've got the market expecting better results after first half pre-tax profit fell by 48%, hurt by those price wars on the one hand, but then again higher costs on the other.
I think obviously first half was extremely difficult. We had this irrational voice war, which actually was captured in that first half period. We had very high rates of inflation. Safaricom has a very high inverse correlation to the rate of inflation. And I think, you know, that was clearly a very tough time that they had there. But I think the rebound has been quite strong. They've avoided issuing a profits warning, which tells me that the full year will be not more than 25% less than the previous full year, and which leaves me to think that we've got further upside in this share, and second half versus first half might look extremely good. I'm looking for around 4 shillings on this share now, and I think that's perfectly reachable.
That's not the only company that seems to be gaining traction in terms of earnings progress moving forward. Aly-Khan, we've got the spotlight on Scan Group as well, and it seems that Blue Chip's ad spend is going to be lifting Scan Group's market share to 70% of all advertising booked through agencies from the 61% that we saw in 2009. What's your outlook for a player like Safaricom in the current economic environment?
So actually it's going to be about 80% because they've also taken over Ogilvy. Ogilvy have 10% of market share in that advertising spend. Scan Group, I think, is in a sweet spot. It's riding a rising tide of advertising expenditure across sub-Saharan Africa. I'm noticing big blue chip corporates increasing their ad spend, looking to gain more mind share in a consumer market of 1 billion people across the sub-Saharan African continent. And Scan Group essentially is a WPP for Africa. WPP, by the way, now have at least 37% of Scan Group and are the biggest single shareholder on the register. It's a very similar prospect. I think it's a rising tide. It looks very attractive to me. First half results, profit before tax was up 87%. I see very little reason for a deceleration. I see good reasons for further acceleration. Therefore, I remain a bull. And this remains the only pure play in this region in the advertising sector.